Hey there, friends and followers. Today's informative video is all about those individuals that are looking to get out into the marketplace and make a financed home purchase. This video is all about some of the most popular home loan types available to you. Stick around. So yes, as always, welcome back. So one of the first steps to the home buying process is, of course, reaching out to a mortgage lender and discussing your situation to see what and how much you can qualify for in regards to a home mortgage. Now, everyone's situation is going to be different, and there are certain subtleties that can and will affect what loan type you are going to be eligible for. Some of those subtleties being how much down payment you can make, what interest rates you can afford, and of course, the property type that you are after. One disclaimer that I would like to go ahead and mention is that I am not, in fact, a mortgage lender, but the idea of the video is to quickly familiarize yourself with some of the most popular loan types available to you out in the marketplace as a prospective future home buyer. Let's jump in with probably the most popular loan type available out there, which is the Federal Housing Administration or FHA loan type. Now, this loan is often associated with first-time home buyers, but in fact can be utilized by just about anybody. This loan is backed by the federal government and people like it as it only requires a 3.5% down payment. Now, the FHA loan type can only be used on what would be a primary residence and not a second home, vacation home, or investment property. In some instances, buyers can qualify for this loan with a credit score as low as 500 points. Now, with that being said, you may be required to put more money down or find a specific institution that's willing to lend to you with that low of a credit score. Another great perk of this loan is that it's usually more flexible with your debt to income ratio than other loan types available in the market, meaning that you're allowed to have a bit more debt and still be eligible to be financed. Please note that you will also have private mortgage insurance attached to your monthly payment with this loan type. Next loan type is a VA loan. This is a great loan option for those individuals who are military veterans and their spouses. One of the biggest advantages to the loan type is that the purchase is 100% financeable with no mortgage insurance attached. This is a great perk as it will allow one to buy more home, as with 100% financing, there will be no down payment required. VA loans will usually have an acceptance level per your credit score of about 580 to 600 and a debt to income ratio of about 40%. So as you can see, requirements for this loan type are a bit more strict when compared to the FHA loan type. Another specific detail to this loan type is that if you're looking to make a purchase on a condo unit, there is a specific list of approved condo associations per the VA that you must abide by. Depending on the condo association, you may or may not be eligible to move forward with your purchase. Of course, verifying that information with your realtor and of course your lender is going to be best practice. Third loan type up on the list is none other than the conventional mortgage. Now, typically when we think of someone utilizing a conventional loan purchase, we think of a bigger down payment being used. 20% is the general rule of thumb, but some financial institutions will give you a product that only requires a 3 or 5% down payment with your conventional mortgage. However, do please note that if you are looking to use this loan type and only put out a 3 or 5% down payment, based off of the interest rates in the payment structure, it may be in your best interest long-term to roll with something like an FHA loan. One great detail is this loan type will cater to a home residence other than your primary, be it a second home or an income-producing unit, making it the universal choice for residential home lending. Typically with this loan type, you will have to have a minimum credit score ranging from about 620 to 650 and the debt to income ratio capping out right at around 43%. So given the criteria and down payment amount needed for this loan type, you may ultimately not qualify for as much home versus one of the other loan types already mentioned. And lastly, we have the USDA Rural Development Loan. Now, finding a lender that specializes in this loan type is going to be key, as there are a few extra steps involved in the overall process of getting to the closing table, getting funded, and getting closed. USDA is offered as 100% financing, and in some cases, even some of the closing costs being factored in. The caveat to this loan type is that it is limited to designated rural zones and nothing within the city limits will qualify for this loan type. Now, second or investment homes are not allowed with USDA financing, and generally the home must be in readily live-in condition with minimal defects affecting the property in order for it to qualify. Now, with this loan type being location designated, it obviously works in some areas better than others. With Marion County having 4 or 5 different major residential pockets being USDA eligible, this may be the ideal loan type to inquire in on. Well, there you have it, friends. That is a heads up on some of the most popular home loan type options available to you out in the marketplace. Now, if you are thinking of moving forward and making a home purchase, be it your first home or be it your second or third home, and the OCALA, Florida area is the end destination, reach on out to me. I'd love to hook you up with one of my great rockstar lenders and just help you get that process overall started. As always, slide on over to the page, give it a like and subscribe to stay up to date when great residential real estate market information like this is released. And as always, thanks for tuning in and checking out the channel. We'll catch you guys on the next.